It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Tyrone Jackson, the wealthy investor, welcome back to another dazzling episode of Trading Stocks Made Easy. What is going on in the stock market? What about the pullback that happened this week? Your favorite stocks seem to be declining in value. Why is this happening? Well, you've come to the right place. There's a lot going on, but you and I are back together again, so let's hop to it. Okay, we are in the middle of a pullback, and I don't mean to sound enthusiastic about that, but this is episode 252 of the Trading Stocks Made Easy. What's going on in the market? All right. Today's show is going to be part economics and part stock market trading. Let's start with our new president, who is insistent on adding tariffs to imports. So for those of you who might not be familiar with Economics 101, a tariff is a tax on products that come into the United States from other countries. Well, you know that the U.S. economy is 2/3 consumer base. Our economy runs on us buying things. We don't have a lot of natural resources like gold and copper and silver in the ground in the United States. Our biggest commodities are things that we produce, like software, other IP, television shows, and movies, and a few things that are produced here in the United States, like quilts, maybe sand, a few other minor commodities that don't make billions, but that contribute to the U.S. economy. Most of everything that we purchase here in the U.S. comes from China. Have you ever shopped at Target? Yes. 80% of everything that's in stock in Target comes from China. Well, the Chinese government actually pays a series of taxes on the items that actually come into the United States. Now, tariffs get really complicated because you can tax, let's say, gasoline, but not at the same rate as your children's favorite toy, right? So, tariffs across the board go up and down based on sentiment and how a particular government feels about trading with another government. Before the Trump tariffs, these additional taxes, China has been paying very high taxes to make up for certain shortfalls. And I'm trying to think of a way to explain this to you to make it very simple, because we're trying to keep up with their gross domestic product. Their output is higher than us. They have higher profit margins. And the U.S. takes offense to that because they're also getting items from the United States, but those items are generally very expensive. So if you're an inexperienced president, you say, well, let's raise additional taxes on China to do what? To bring down the U.S. budget deficit. That is the intention and the story that we're being told. Hey, if we raise prices on China, we can now negotiate better rates on other items that come into the United States, as well as other political themes that might be blowing in the air. So let's create a negotiating point using tax increases, and we'll get more of what we want out of China in the long term. Now, if you went to high school, this was talked about for about a week, and you thought, I'll never use that, so why should I pay attention? Here's the problem. When you increase a tariff on a government, then the items that come in from, let's say, China, that show up on your shelf at Walmart go up 25% or more in price. So we get the Chinese to pay a higher tax. That increase in price, that tax, is then passed on to the consumer by a retailer like Target. So we wind up paying more for things like sheets and tablecloth and salt and pepper shakers and televisions and pretty much anything that comes from China. So when you raise the tax on China, guess what you're doing to people like you and I? You're raising the cost of products that we use every single day. So we wind up carrying the burden of those extra taxes. Now, in the financial world, when we're assessing whether we're going to invest in a company's stock, the first thing that we look at is top-line revenue. How much money is that company bringing in every single 13 weeks? In other words, what are their gross profits that they're taking in? When we look at that gross number, just like your paycheck, we then look at where their spending is going. Advertising, marketing, employee costs, state taxes, local taxes, taxes for doing business, filing fees, just a whole array of taxes and expenses. And when we're done looking at those expenses, we're down at the bottom line of a balance sheet on a quarterly basis. And then we're looking at the profit margin. So if you're a retailer and you're in the middle of every transaction, you're making a profit on every item. In the grocery store business, there's usually a 5 to 10 cent differential between what it costs the grocery store and what you're paying. That's because profit margins in your grocery store are very slim. On retail businesses like Costco, Walmart, there are greater profit margins. That's why when you go in and an item is on sale, they're willing to take very little profit on that item that's on sale to get you to come into a store. This is known as a loss leader. Well, we know corporations that are publicly traded aren't in the habit of doing what? Cutting their profit margins. They just send them to the consumer and we pay the price increase. Well, Economics 101 says that if you and I are paying high in prices, that causes something called inflation. Everything to go up. So when a president stands up and tells you that they're going to raise taxes on foreign companies that are importing items into the U.S., they're really raising taxes on guess who? You and me. We are paying more for that item at the retail outfit. And then what do you think your local state government does? They will increase their taxes and everything becomes more expensive. Tariffs have never been the way to go for the American economy because when you start raising prices on things, we as the consumer become very selective about what we're going to spend, and we tend to, as a group, save more. So higher taxes mean more tariffs. Consumers hold on to their money. The economy starts to restrict. We save more because we're trying to keep up with the cost of products that we like, and we spend less, which almost always equals a recession or, worst case scenario, a depression. When economies spin out of control because of wild inflation, they usually hit recessionary levels within 6 months. So, if this current administration has its way, prices will go up radically within the next 30 days, inflation will increase, and we will most certainly hit a major pullback in the economy within the next 6 months, which is not good. So if the economy begins to pull back, businesses lose money, and then we get layoffs and unemployment. Now, I'm not being doom and gloom here. I'm just telling you historically what has happened in the United States over the last 80 years when you start to tinker with tariffs. And of course, the stock market begins to fall. Okay? So it's a series of cataclysmic events that interconnect in terms of economics that causes prices to go higher and economies to significantly decline. Now, that's one side of it. But if you start raising tariffs on Canada and Mexico, the northern and southern partners of the United States, that's going to accelerate the cost of things like gasoline, fuel oil, and products that we trade with Canada and Mexico. Now, a lot of people go, well, Tyrone, I just want my stocks to go higher. Well, your stocks are not going to go higher if the people who run the company can't tell what their profit margin is going to be, their markup on what they're sending to the consumer. That creates massive amounts of uncertainty, and stock prices are not going to rise in that environment. Okay? So when someone is selling you something on television, you have to look at history. You have to look at the history of tariffs in the United States. And thankfully, you and I have this thing called Google, and we can find people who've written about the history of tariffs in the last 20 years online. They may use more fancy terminology, but the end result is almost 100% of the time a recession or depression followed by job losses and businesses folding up shop. Is that the kind of world that you want to live in within the next 6 months? Because it's going to surprise a lot of people when they start losing their jobs. They can't make their car payments because there's not enough money coming in, and they can't make their mortgage payments. So you're going to see a lot of people, if these tariffs are enacted, start to lose their home. There's no way around it. If you don't have the money to make your mortgage payment, you're going to fall behind and the banks are going to take your home. And if your real estate taxes go up at the same time and your insurance, you are in trouble. Now, this is odd for me, the wealthy investor, to deliver this kind of news that is very doom and gloom. But there is an upside. The upside goes like this. If you have a stock trading account and you're engaged in a wealthy investor strategy like covered calls, you will always have income. Why? Because we take the money that we make from covered calls and our dividends, and if it ever is required, we live off those profits. Now, can I sell covered calls when a stock is going down? Yes. On the shares themselves, that's going to give me something called a trailing cost basis, because the stock is dropping in value, but I'm getting paid from that. And that's money that I can actually spend, unlike the person who just has a job. So if you haven't been focusing on wealth and residual income and the economy pulls back, guess what? You're going to suffer just like everyone else. But if you have another income stream, because you're a stock market trader in the wealthy investor style, you're going to have income while other people are going to lose their homes, jobs, and houses. This is one of the reasons that I started teaching over 20 years ago, because I wanted to help as many people as I possibly could get a financial education and always have a residual income stream that comes from a side hustle, if you will, which is trading in the stock market. Now, right after this break, I'm going to give you some other ways in which you can make money when stocks are falling, and I'm going to show you how hedge funds make millions of dollars a week trading stocks that are in decline. Right after you listen to this.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
Trading Stocks Made Easy, episode 252. What is going on in the stock market? Hey, do me a favor. If you think this podcast can help someone you love, like, or you think would benefit from a financial education, you can simply share it. It's totally free, and it's a great way of finding out who has a millionaire mindset, and you never know who you're probably helping in the process. What is going on in this market? So we just talked about recessions, pullbacks, stocks declining. Now, let me explain to you what I think is the most fascinating part of all of this is the people who get rich in a decline. Now, let's talk about those people and let's talk about a set of facts. Fact, less than 10% of the American population owns stocks directly. Most people own stocks as part of mutual funds that they buy into. Now, a mutual fund, as I've said on the show before, is nothing but a basket of stocks that you let someone else manage and choose for you, and they charge you a monthly and or quarterly fee for looking over that money, being the overseer. Okay? All right. When you buy stocks directly because you have a financial education, there's no one above you. And if you're choosing stocks that are in the Dow Jones Industrial Average and the S&P 500, you are surely getting dividends delivered to you on a quarterly basis. This is the foundation of the Wealthy Investor Program. Not that we're buying $2 and $3 stocks that are highly speculative. We're choosing superior stocks that make up the two major indexes in the stock market. Okay. When those indexes start to fall, there are trades outside of covered calls that you can place that bring in income. So to generate income on a stock in the Wealthy Investor approach, you have to sell call options against the shares that you own. That's how we make the income. Well, without making it too complicated, the easiest trade in the world to make money when stocks are going south are spreads. All right. So a spread comes from buying an out-of-the-money call and selling a call against it, just like a covered call. Why does this trade work? Because if you know anything about options, you know both of those options expire over time, or they lose their value based on time, which is called theta. Well, if I know how to sell something that's on its way to zero, because when I buy an option, I am trading rights to a stock instead of the stock, I can double or triple my money on every single trade that I place. So you know how I'm always encouraging you to get that financial education? Well, the stock market inherently is very seductive. Why? Because if you really understand the markets, and the stock market is truly one game in 100 ways to play it, if you learn covered call writing and dividend collection, those trades work best in bull markets when the market is rising. If you learn a series of strategies that allow you to make a small fortune on the way down, and we're in a market like we are in now where stocks are pulling back, forming what's known, which I cover at trade school all the time, forming V bottoms with lower lows, guess what? Your spread trades are going to be highly, highly profitable. So some traders who listen to this very show graduate themselves to learning how to use leverage with options while still owning stocks. It was funny because just yesterday, I was on a call with someone who's a professional. And they were saying, Tyrone, could you show me how to make money off these stocks on the way down? And I said, I sure can, but you better get really, really excited because my specialty is not declining markets. I love bull markets like everybody else, but I'm just as good at making money when stocks decline. And how did I learn that? Because I lost money on a decline in the market 15 years ago, and I swore that I would never let that happen to me again. That motivated me to become an expert. So I favor bull markets, but since the market is actually bearish right now, there's nothing for me to fear or be afraid of. So I said to this professional, okay, can you pull up an option chain where the options expired 3 weeks from now? And I taught him the trade, my favorite bear call spread trade. And he goes, oh, you would make X amount when the stock went down. So I was saying to them, this is the 3-week version of a bear market trade. Ultimately, on this Zoom call, I showed him the what? The 2-day version. How to make fast money in 2 days when a market is declining, and then you do it again and again and again. In the Wealthy Investor Program, we call that wash, rinse, and repeat. Now, the faster the market is actually declining, the faster your profits will be that you will capture when stocks go down. So, although I take criticism for this next statement in the media, I will gladly do that if it helps you. There are some people largely institutions who have mastered earning millions of dollars a week when the market is declining. This is an opportunity for them, while planting seeds for the retracement, because this crisis that we're in or headed towards will someday be over. When? Can't tell you for sure, but then those institutions play the other side of the market. But I can't teach you about all the variations on spreads and options and how to use them now. That's something you need to study. But is it worth it if I can show you how to make $1,000 a week outside of your job when markets are declining? I think the answer is yes. Well, if I can teach you to make $1,000 a week, surely I can teach you how to make $5,000 a week in 2 days when markets are declining. Could you use an extra $5,000 a week because you have the financial education to exploit a bear market? The answer, of course, is yes. $5,000, $10,000, $15,000, $20,000 a month if I show you how to use these 2 and 3 day trades to your advantage. That's kind of exciting, because if a stock can only do one of 3 things, go up, go down, and stay the same, well, those are the only 3 variables you are ever going to deal with in the stock market. So why not put your mind to learning how to generate an extra $5,000 a week? Now, the truth is, you can generate $1 million a week. You need a bigger account. So why don't I show you strategies that grow your account, the cash value of your account, and some of you know this because you're my students, while simultaneously growing your stock buying power so you can scale up on the leverage side. Then why don't I just show you the stocks in this market right now that carry the lowest risk so you can exploit this pattern? Okay? So a lot of people love trading in bull markets. Bear markets are rare, but we are in the middle of one right now, which means there has to be people making that $5,000 a week. It's nowhere near as difficult as you think it is, but like everything, you need an education. What kind of an education, Tyrone, do I need? A financial education. That's what the Wealthy Investor Program is all about. Not just trading stocks for fast money and greed, but understanding the economy, understanding tariffs, understand when someone is telling you something that is impossible, and understanding historical norms and patterns as it relates to the stock market, because it's affecting your mutual fund. You're just not generating any income from it. So let's work together and make 2025 the best year for you. Let's make the best possible results out of today's current circumstances with the market that's declining, because it's time for you to take your studies to the next level and learn how to get paid every single time the market pulls back. If this all sounds too good to be true to you and not honest and not real, it's because you just don't have the education to exploit it. Episode 252. Pass it along to a friend or loved one who you know might be fascinated by the markets and might like a little financial education for free right here on the Trading Stocks Made Easy podcast. Okay, I'll see you soon. I don't know what's around the corner, but I don't see our market heading up in the next 30 days. Not to be doom or gloom, but I have to bring it to you in context the way that it is right now. Our market will go higher from here, just not right now. But isn't this the time to be buying your favorite stocks on sale? Well, more on that on the next episode of Trading Stocks Made Easy. I'm Tyrone Jackson, and despite our external circumstances at this moment, I'm asking you to stay positive and stay open, because good things are going to happen in your life. I'll see you soon.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.